All right, it is 11:03 and we're here for a meeting with the auditor, and with that, we'll turn it over. You guys have a microphone right there.
All right, let's get to the mic here. So my name's Jordan Swigart from Swigart, John & Associates. I'm going to go over your audit for the year ended September 30th, 2024. I'll kind of just hit some high points. If you have questions as I'm going through, please stop me. More than happy to go in more detail, but don't want to bore everyone to death either, so.
Commissioners would be interested in low points too.
The low point, okay, we'll hit all the low points.
And I guess I would ask, like, on the next time audit, can we get these before so that we can go through it and then ask questions? Because we haven't been able to review it to be able to know.
So yes, there was one more change you had to do like a week ago or 2 weeks ago, so this is almost hot off the press.
Okay.
Not totally.
But yeah, we'll make sure that you guys can get in PDF next year
All right.
ahead of time.
Thank you.
I'll start on the big bound copy on page 3. This is our opinion on your financial statements. So this is kind of how did everything go? Overall, what it says is that these are your financial statements. They're pulled from your accounting software. We looked at them. We looked at supporting document, backup, and in our opinion, they're materially correct. I mean, everything's been recorded. All the transactions have been accounted for and are in the system. From there, I'm going to skip forward. Right after that, I'm going to skip past it, but is the management's discussion and analysis right after our report. This is just a high-level summary of kind of what happened the year countywide and what's going on. I'm going to skip over that so we can go a little bit deeper into some detail. So I'm going to jump forward to page 15. It says balance sheet governmental funds on the top. This is your balance sheet as of the end of the year. So you see the general fund, you ended with about 4.5 million of cash. Justice was at 9.2. Road and Bridge was at just under 8.2 million. Your grants funds had about 242,000. Ambulance ended the year at 688,000. And then all of your other funds, and we'll look at those a little bit later, had about $9 million in them. Few other things, I'll just kind of go down.
I'm sorry, could you
Yes.
back up for a moment? I'm having trouble following those values on page 15.
So the very top line. So the general fund, you see that's 4,529,000.
Gotcha. Okay, thank you. No, I was starting at the bottom.
Sorry.
Okay,
So yeah, no, I'm starting at the top on this one, sorry.
All right, thank you.
So overall, countywide and all your governmental funds, you ended with $31.9 million total. I'm kind of going down there. I'm just starting at the top, going down. The receivables, taxes receivable, just over $1 million total. That's just back taxes still owed to the county. Interest receivable, about $80,000. That's interest that was earned in September that you got paid in October. Fees receivable, $682. That's just some miscellaneous fees there. And then accounts receivable, $286,000. Most of that is ambulance fees that were owed but hadn't been collected yet. Prepaid items, you had about $43,000. That's just stuff that was paid for in September that's really for fiscal 25. So it sits there until fiscal 25 won't be expensed. Due from other governments, the 2.5 million, that's grant money that's owed to you from other governments and funds from the state, like state sales tax that you get in October that's for that last quarter of the year. And then due from other funds, that $527,000, that's some inter-fund balances where one fund was covering something for the other fund that will eventually be paid back. The liability side, warrants and accounts payable, 50,000 and 1.9 million. Again, that's just timing invoices that come in after the year end that are pulled back for that fiscal year. Accrued payroll of 1.1 million. That's hours worked in September that were subsequently paid. Accrued retirement payable, 130,000. Then that due to other funds of 527,000. Again, that's that inter-fund stuff there. But overall, all of those funds ended with more cash assets than they had liabilities on them. Any questions on those? All right.
Does this not include what I would call, for lack of a better term, flow-through funds?
So, like sales tax that you get in for other
Or
taxing
districts?
that is not included in there.
Yeah, because it seems like the total values then would be more than
Yep,
double.
and we'll look at those. Those are included later.
Gotcha.
But so that's just your governmental funds. So that's just county money there. Good question. Thank you. From there, I'll jump forward 2 pages to page 17. This is the income statement for those funds. So here I'm gonna jump down to the bottom. The third line from the bottom, you'll see net change in fund balance. So the general fund had a decrease in reserve of about $3.8 million. A justice fund increased its reserve for the year by about $1.8 million. A road and bridge increased its reserve by about $2.7 million. Grants decreased by $368,000. The ambulance decreased by about $1.3 million for the year, and then all the other funds, we'll look at those later, with about $550,000 increase for the year.
And I'm gonna look at staff and other electeds. Do we know if the 3.8 decrease for the general was associated with the new facility construction?
Probably
Primarily.
a good chunk of it, not in its entirety, but yeah.
Gotcha.
Yeah, so,
And that was also us expensing a remainder of, like local tribal consistency, so yes.
Okay, thank you.
any other questions on that?
Sorry, I'm asking a bunch of questions because I was not here during that period of time on the board, so I'm trying to get my brain caught up with where these values are coming from.
No, I'd much rather questions than just blank stares, so I appreciate it. From there, I'm gonna jump to page 19. This is your solid waste fund. So your governmental funds are all the funds that are really driven by taxes. Solid waste is driven by fees, so it's just reported separately here. So it ended the year with about $8.1 million of cash. Again, had some back assessments and accounts receivable there. And then on the liability side, similar to what we saw in the others, this balance sheet looks a little different because it shows some long-term debt on there, but we're going to look at that countywide a little bit later. So turning to page 20. Because solid waste is what's called a proprietary fund, which is ran by fees, it's reported more like a business. So you'll see they're changing that position at the bottom of negative $65,000. But if you turn the page to page 21, towards the bottom, you'll see net increase in cash and cash equivalents. So cash went up in that fund by $1.4 million, but that's because there were some loan proceeds on there causing an increase in cash that aren't revenue in that because it's reported like a business there. So that's what's causing that difference. So overall cash went up, but most of that was used for building the new building for that construction project there. And it was loan proceeds to pay off a bond that was already there, the bond anticipation note. There, I'll jump to page 23. This next set here, these are your self-insurance funds, your medical and dental. So you ended the year with about $2.5 million in those. And then jumping to page 24. The income statement on those overall increased by $650,000. So both of those had an increase in their reserves for the year on those. From there, I'm going to jump forward to page 27. These next two, these are the pass-through funds. So these are the funds you collect for other taxing districts or for the state. You get the money passed through. So at the end of the year, you had $4.8 million that you guys were holding on behalf of those other entities that was to be sent out. And then you had about $1.1 million of back taxes still to collect for those taxing districts. And then if you turn to page 28, this just because of timing, but overall, you brought in about $48 million and sent out $48 million. So that's just the money that flows through and flows out. never zeroes out just because of timing of when it comes in and when it's paid out for the year. So those are the basic financial statements. Any questions on those? All right, from there, I'm gonna skip forward in the notes to page 38. On page 38, this just shows where your cash was at the end of the year. So this is all the cash combined, so this is not only yours, the proprietary, those other people. So you can see the biggest items there are where most of the cash is some repurchase agreements. The treasurer account there had that $22,000. And then your next biggest is the local government investment pool. The state LJP had almost $14 million in there. And then you have some other repurchase agreements and the multi-bank securities, some investments in bonds and such, they're of about $4 million. Any questions on that? I'm gonna jump forward to page 42. So the next few notes that we're gonna look at are more of the long-term obligations that the county has. Footnote 5, right of use assets. These are basically leases that you have. You guys have the right to use that asset for that time period. So total, you have about $1.3 million future payments still to be made on those. If you look at the table on the bottom there, that's the future payments. So it started with 1.4. You had some equipment leases of about $43,000. You have about 1.3 left. And then if you turn to page,
Hey, Jordan?
yes.
You've been living this for the last however many months. The rest of us haven't necessarily, so slow down just a touch.
Okay, sorry.
I guess, I think for me too, I'd like to see, like maybe next time we get this a week ahead so that we can read it, because I can hear you're just giving the overview of it, but in order to actually digest what's here and to ask meaningful questions, it's not, I guess that's why I didn't slow them down, because I can't digest the information in a meeting with this much data.
Yeah.
So I guess I wasn't slowing them down because I feel like we're gonna go back and have to read this and then most likely say, okay, we'd like to bring you back and ask some questions about
Which
it,
is perfectly fine.
because it's just, I'd like to see it ahead of this kind of meeting.
Yeah. So, and I will slow down, I appreciate that. So I'm just trying to kind of show you as you go back, look at it, where information is and kind of some of the key points to go and look back at. So yeah, footnote 5, really I think the important stuff's more that last thing there that shows what your future lease payments are on those leases. And then page 43 at the top just breaks out those lease payments for the next 5 years and then after that by principal and interest payments on those.
I'm sorry, I don't see any footnotes.
They're all footnotes, so you see the 5 on the top of the
43.
page.
Oh,
so
I
it's
see.
5.
Okay, it's just not a format I'm used to for a footnote.
Oh, okay. So, sorry, we call, it's not really a footnote, we call all the notes after the financials footnotes, they're not really
Okay.
like in a
It's
research
slightly
paper
different than,
footnote.
yeah,
Yeah, it's not a numbered, yeah.
yeah, it's a little different than a technical paper
Yeah.
footnote, so.
The notes is better. But the top there, foot 5, right of use assets, that just shows you the future payments on all of those. Right below that, note 6, compensated absences. This is vacation time that your staff has earned, but as of September hadn't taken, so if everyone left at that point in time, that's how much would be paid out. So a little bit of an increase, ended the year with $2.2 million worth of vacation time owed. For an end of the year size, most of that increase really is just due to increase in wages, which is good, because one of the things we look for there is, are people using their vacation time? Are they not just sitting on it? So that it stayed pretty close to the same, means that vacation time is being used as it's earned there.
So how do you normally How many years would you normally amortize that type of a liability?
The compensated absences, so it's more of, it's not really amortized, it's expensed as it's used, so we'll just, next year, as it's used, that will go down, and then as it's earned, it will go back up.
Okay, so you don't look at it like some of the, like the lease liabilities?
Correct. It's more, that's more of an actual number of, at the end of the year, what we do is we look at everyone, how much vacation time did they have?
Yeah.
What's their hourly rate, and calculate it out and say that's what the balance should be.
So you're more looking at a trend and a ratio of what we're, number of staff and compensation level versus how much we're carrying, is that?
Yeah, and for reasonableness, the actual number is just a straight calculation, pulled from the HR system, everyone's vacation balance at the end of the year.
Right.
Times their hourly rate. And then we look and say, okay, is that reasonable? Hours per person, trends, was more used than earned during the year, things like that.
I guess that's what I'm trying to understand is how do you evaluate whether it's considered a reasonable number or a concerning number?
Really, they're looking at number of hours that people have. You know, if individuals are getting into the 5, 6, they've seen someone with 1,000 hours, then that's kind of a flag. Also, depending on your policy, are they outside of your policy?
So one thing, Commissioner Dumpkin, we're doing, if we know somebody's going to retire and be taking all those, we do try to budget for that ahead of time. One thing that's always caused us a little angst is what happens if we do have a mass, this kind of a situation, they do take it all, because then it is a huge hit to our cash flow. So that is a concern, but people don't so far.
Yeah, I was just trying to understand sort of what the best practices are with how to look at managing that number.
Sometimes they do it through policy by dictating how much you can bank every year over year so that this type of a hit doesn't hit the organization, to do kind of a use it or lose it, but banking an extra 2 on what you can build.
Yeah, that really is the best way to do it, is through a policy.
Yeah.
Making sure that, again, the worst offenders I'd seen in the past were fire districts, where I'd seen someone retire and they basically have 6 months to a year of vacation time sitting there that gets paid out when they leave.
Yeah.
So, because normally you're not going to have a mass issue, it's just you don't want any 1 or 2 individuals to have that much. So a policy helps limit that.
Thank you.
No, thank you. Any other questions there on the leases or compensated absences? Turning to page 44. Long-term obligations, this is debt that the county has. So the difference here, you'll see some equipment here. The difference here is this is equipment that the county plans to keep at the end of the life, where the right of use assets is equipment that's going to be returned at the end of the agreement, is the distinction there. So you can see your government activity, you start with about 2.8 of equipment. $2.5 million was added on. Most of that were the motor graders. There were 6 motor graders. 1.7 million was paid off, so you have about 3.6 million left on those. And then business type activities, again, that's the solid waste. Started at about 3.7. Got the USDA loan of $8 million, which paid off a bond anticipation note on that USDA loan, causing the $3.6 million decrease, ending just over $8 million there. And then down right below that, you can see the future payments on those, broken up between principal and interest for those for each of the next 5 years. The rest of the notes there I'm going to skip over. Most of those go over Percy, your self-insurance fund, and just kind of pretty boilerplate there, but on those. So I'm going to jump forward to page 55. These next few reports here show what was budgeted for the year versus what actually happened. So general fund, the revenues on the top revenue total there, you budgeted to bring in 7.9 million. You brought in 9.8 million, or just under $2 million more than was budgeted. On the expense side, you amended the budget, so your final budget was just under $15 million for there, you spent 14.5, or about $400,000 less than was budgeted for the year. So overall, with those differences there, you budgeted to use, in your budget, you'd allotted $6.2 million of your reserve to use, and you ended up only using $3.8 million of your reserve. Any questions on that one?
Would you go through this page one more time?
Yeah. So, as page 55 here, so the first column's the original budget, so that was the budget originally adopted. Column 2 is the final budget, so that's cumulative of all amendments throughout the year. And then actual column is what actually happened. So overall, there in that variance column there, you brought in $1.9 million more. 1.2 million of that, most of that difference was interest income. You're pretty conservative, which most counties are with interest income. You budgeted 900,000. You brought in 2.1 million, causing that extra revenue to come in. On the expenditure side, you amended the budget there from 10.5 million to almost 15 million. You spent 14.5 million, so you ended up being under budget by just over $400,000 there overall. And then transfer going down there, transfer in was pretty much right on budget. You'd planned to transfer in $800, transferred in a little bit more. So that net change in fund balance, in the budget column, that negative 6.2 million, what that means is in your budget, you'd plan to use 6.2 million of prior year's funds to cover current year expenses. And instead you only ended up using 3.8 million of prior year funds to cover current year expenses.
I suspect that jump from 10.5 million to 14.9 has a lot to do with the EMS building and all that kind of stuff.
That was my question, but wouldn't that have been budgeted?
Well, it would have been when it was paid out. Also, the local tribal consistency fund, that was not budgeted, that was paid straight out to EMS.
Because from the original budget to the final is about a $4 million increase.
I'm not sure on that, Clerk Rosedale, because in some of these changes, like within public safety, so I think if we want to know the difference between those two, we'd have to do some research.
Yes,
I don't think that
I'm just looking at the order of magnitude of those.
Yeah.
Yeah, because it's a
But
$4 million on the capital outlay line.
Yeah,
Yeah. Maybe the due for culvert would have been one of them, but,
That should have been out of this road and streets.
okay.
And
Yeah, it'd be nice to understand that $4 million shift in the capital outlay.
And I can, when I get back, I can send the detail of what exact lines that amendment was, what expenditure lines that amendment was for.
That'd be helpful, thank you.
Yep.
Because that's the biggest delta I see.
Yeah, that really was the changes. The capital outlay and the offset of that was fund balance was used to cover that change.
I think this is a page, though, that has, after we've taken a look at it, has an opportunity for more explanation, because although that's saying where we came in short, we also didn't use as much as we anticipated, so to understand why we didn't do those things helps to better understand kind of the practice that went in place with that. So just because it's not under, doesn't mean we shouldn't look at that feature as well, because that's a significant estimation difference of what we used versus what we said we were going to use, and to understand why I think would be beneficial. But I think the board, after we review it, will have some detailed questions to ask about that.
Yeah, no, and so, yeah, I will send on that big delta there, and then, yeah, as you guys have more questions on that, we can get that as granular as you want.
Probably a good thing a way to deal with this would be to have the commissioners review this, come up with a whole bunch of questions, and then you can answer those, and then they'll have more after that, but that way you can come up and address a bunch of them.
Yeah,
Or by Zoom or?
yeah, and, yeah, we can work out whatever works best. I'm fine either way. Any other questions on 55?
Not this time.
Turning to page 56, this is the Justice Fund. So this fund, the revenue side, really there was no amendment there. You'd budgeted to bring in 28.6. You ended up bringing in 22.6. You ended up bringing in 22.9, about $260,000 more than was budgeted. And you can see there was some property taxes was a little bit less than was planned. Intergovernmental amounts from other states kind of made up for that, causing you to go over a little bit there. And then on the expenditure side, there was an amendment, so you went from $23.9 million to $24.1 million in expenses there. Ended up only spending $21.1, or about $2.9 million under budget there in the public safety. Again, where you'd budgeted to use 1.4 million of your reserve. In this case, you actually increased your reserve by $1.8 million instead. And if you want, I can break that out, that public safety out, into the specific expense line items that cause that. Let's see. Then the next one on page 57, this is Road and Bridge. Revenue side, you'd budgeted 11 million and you brought in 14, or about 3 million more. Most of that was the increase in highway user funds from the state for the year. That was pretty common amongst almost all governments in Idaho this last year, that came in a lot higher than was budgeted. On the expense side, you amended the budget, so your final budget was at 14.5 million. You end up spending 15 million, or about $500,000 more than was budgeted for the year. And part of that, I'll just point out, is the way that government accounting accounts for leases. When you lease equipment, you'll see proceeds from long-term financing of 2.5 million and the other financing sources uses. The way government accounting works is the year you lease it, you recognize that present value of all those future payments as revenue and expense. So that's part of what caused you to go over budget in that line, is leasing all of that equipment, ended up being a little bit more than was planned. And it's not cash out the door, but it's recorded as an expense that year, and then it's expensed as you make those payments.
And then the emergency culvert repair on Dufert would have been a part of this additional expense line, I'm guessing. I guess we'll see the details when you
will
send
see
that.
but yes, the capital outlay did go from 250,000 to just under 1.5 million dollars there.
That makes sense.
Page 58, this is your grant fund. Grant funds are sometimes harder to budget for, so you'd budgeted to bring in and spend 3 million. You brought in 3.8 million in grants, spent out 2.3 million, and then that transfer out of 1.8 million, that is the local travel consistency funds that was transferred out of there and transferred into the ambulance fund. Any questions on the grant fund? And then the last one here is the ambulance fund. Again, revenue side, you'd budget the 4.4, brought in 4.7, about $370,000 more. Most of that's charged for services, which are runs, ambulance runs, caused that to go over. The expense side was at $7.7 million budgeted, 7.5 was spent, or about $157,000 less than was budgeted. And then you had that transfer in of $1.5 million of the LATCF funds there, offsetting some of that loss, causing fund balance to go down by the 1.3 million. And all of these, and we'll look at your system, but all of these, they come from your system, so we can pull a budget to actual out of Tyler, and so I can have them help get that, so that can get out to you today. because this pulls from your system. So the Tyler system will show budgeted to actual on a line item basis that we can get to you that will tie back to these reports.
Thank you.
From there, I'm gonna skip to page 64. From page 64 to 68, earlier we saw a line item that had $9 million in cash that said other governmental funds. This is all of your other governmental funds. So this shows each fund individually with what the cash balance was in there. One of the big things we look for in these funds, I mean, we test the expenses, is really if they have negative cash, if they spent more money than they had. One fund did, the translator district had negative $275. That was just a timing issue there. All the other funds had positive cash. So again, I'll kind of, that's where that is. So as you review that later, as you have specific questions, we can go through those in more detail, unless there's specific funds that you want to go over in more detail right now. And then similar, page 70 through 74 is the income statement for all of those funds. Again, you know, the big thing we're looking for there is that negative. So some of them did use reserve during the year, which really is not a concern as long as there is that reserve to use. And the only one was that translator district that went over on its cash balance. All the others did not go over on their cash balance there. Do you want me? I'm more than happy to go through those line by line if you want, that if you think that'd be useful, or if you'd rather go through those and then have specific questions, I'm happy to do either one on those.
For me, I'd like to go over it on my own line by
Okay.
line and then come back, but what does the rest of the board want?
Yeah, I agree. I need to dig in.
Yeah, no, and I know there's a lot there. And again, all of this is should tie back out to the report you're getting from Tyler, the report you're getting saying here's what's in each fund, here's what's being used for fund. This is just consolidating that information to a smaller bite, but that's all pulled from your accounting system. From there, I'll jump to page 76. So here at the end, these are more of our reports. Page 76 and 77, any entity that spends more than $750,000 of federal money has to have what's called a federal single audit. It's where we just look at how federal grant funds are spent, are they done in compliance? So 76 and 77, this just lists out all of the individual federal grants that had funds spent during the year and how much was spent. So in total, you spend about $8.4 million of federal money in fiscal '24. From there, I'll jump to page 79. So there's two reports here in the back. This one is over your financial reporting system as a whole. In addition to looking at the numbers, we look at internal controls and compliance with financial reporting. Really there, what we're looking for is more than one set of eyes looking at things. Are invoices being approved and reviewed before they're paid? Are time cards being looked at and signed off of? Overall, the controls were in place. We did have a finding for the year, and really it was in the transition, there was not great training in that transition, so we had to propose quite a few adjusting journal entries at the end of the year to get the financial statements up to GAAP, to financial reporting requirements. So that was a finding, just that we had to do a lot of those. Our recommendation there is that training needs to be provided on the accounting system to make sure that that system's understood, how to use it. It's a good system, it's just a complex system, so how to use it to make sure that all of those entries are made at the end of the year or throughout the year, not by the auditors at the end of the year. From there, I will jump to page 81. This is specific to federal funds. So here, again, we looked at controls over federal funds and compliance with them. Were the funds spent in agreement with the grant, and were there procedures in place to make sure that that was being done? As we pulled the grants that we selected to test, we looked at the transactions, all of them were spent in accordance with the agreement. And as we looked at them, all of them were being reviewed and approved. All the reports were being looked at and were tying back to the underlying information there. So there were no findings over the federal funds for the year. So turning to 83, this is just kind of a summary page here. So you see material weakness disclosed under internal control over financial. That is a yes, everything else was no. So that was the one we talked about. At the bottom, those are the federal funds that were selected for testing for this year. And then if you turn to page 84, under financial statement findings 24-001, that's a brief description of the finding we had that, we had those material adjustments we had to make. It was a training issue there. And so our recommendation is that training be provided there. So I know that's a whole lot of information, a fire hose worth. Any initial questions over that?
With respect to the proposed internal control education and training, did you receive a response from the clerk's office regarding what their plan of action is to correct that?
Yes, they're going to try to get the staff to be able to go to the Tyler conference for the accounting software so that they can do that. And then I've been working with Jessica to show her what those adjustments needed to be so that she's able to do those.
Thank you. Commissioners, any questions?
So I'm assuming you would have stated it, but just to be clear for myself, other than that one finding, was there any irregularities within any of the financial data that caused you to dig deeper that we should be aware of?
No, the big one's always cash. All the cash tied out. All the reconciliations were done tied out. Most of the adjustment entries were for things such as prepaid expenses or accounts payable, making sure those invoices were in the right period, or other accruals of the leases and more of the, for lack of a better, the accounting stuff, not necessarily the cash transactions year. All the transactional stuff, cash in, cash out, that was all being done correctly. And we saw evidence where the reconciliations were done, where all the invoices tied out to the supporting document to the invoices and where those had been approved. So does that answer your
Yes.
question? Okay.
Do you want to talk about the graphs?
Yes, I was going to.
Just one second.
Yeah.
Commissioner Korn, did you have anything to?
No, thank you.
All right, go ahead.
Okay. So the smaller one here, this is just kind of an overview of your biggest funds and kind of where they stood for the year and some historical trends on those. The letter up front kind of just gives a comparison. It says, how did they compare to fiscal 23 versus fiscal 24? And then right after that, on the back, starting with current expenses, I'll just kind of point out what is in the graph, so as you review them later, you can see. The first, and it's the same for all of them, but the first one here, current expense operations recap, this just shows what was your beginning balance, increases, revenues, how much expenses were, and what was your ending balance for the year. The second one is a 10-year trend of the top line, the darker line is expenses for each of the last 10 years, and the bottom line is revenues for each of the last 10 years there. So you can kind of see what the overall trend has been on those. The third one here with the line graph, the fund balance analysis. This shows where your fund balance was. That's the darker line there. The two lighter lines, the bottom line is a 2-year running average of your expenses, a 2-month of your expenses. So it's annual expenses for the year divided by 6. And then the top line there is a 5-month average expense. Recommendation wise, that fund balance really should be at a minimum, 3 to 6 months worth of expenses sitting there. At an upper end, if it gets much over a year, really then we like to see an explanation of why is it over a year? Do you have a project coming up, or what are those funds being saved for? As you can see, for the most part, you're in between the 2 to 5 month range. So, definitely not too high, but not below really the 3 months where then it's kind of a concern. And then the next two are kind of just analysis of the current expense revenue analysis. Where's the money coming from for the year, kind of just in a pie graph. And then the next one is where's the money being spent in a pie graph form for the current year. So on the revenue side, you can see your biggest, in the current expenses, your biggest is taxes, made up 35% of total revenue. And then interest actually made up the second biggest at 20% this last year. And then on the expense side, 48, just under half of all the funds spent was on salaries and benefits, and then your next biggest was capital outlay. On the next set in orange, this is the Justice Fund. So in that first one showing just basically going from beginning of the year, you were at 7.3, ended the year at 9.2 million there. And then Justice Fund revenue expenses, and you can see the 10-year trend there, overall trending up on revenues and expenses. And you can kind of see there, about 6 of the last 10 years, you've brought in more. On the other 4, kind of spent down that reserve there. And then turning to the next page, again, this is that 2 to 5 month band there. You can see you ended in 24 above the 5 month. Still, you're not much over, I think you're still under 6 months there. So it is above that band, but still within a reasonable amount. It's not getting to where you're holding out a year's worth of expenses there or more. You're still within that reasonable area there. Turn to the next in blue. This is the road and bridge. Yeah, the first one showing revenues and expenses for the current year. The expense revenue trend on the next page. Again, showing 4 of the last 10 years, you've brought in more money than you spent. Overall, similar trend to what we've seen. A little bit of increase in 24, and part of that increase there is the new leases that were entered into during that year, caused that jump there. And then, again, the darker blue line's the actual. So again, you are in that fund over the 5 months, but still not over a year. So a little bit of outside that normal band that you guys are kind of running between 2 to 5 months, but not to a point where it's starts getting like you're sitting on excess money. Then the last set here is the EMS fund. So the first one, operations recap, you can see your fund balance went from 2 million to just about 800,000 there. On the trend, again, the big increase, the big jump this year was that local assistant travel consistency funds that were put in there for the building. Then on the trend there, you can see, again, last year there was a big increase, and this year had a big drop. And that one is the one that was probably most concerning because it is under that 2 months worth of expenses in that fund. So
We lived that.
yes, yeah. So and I know everyone's aware of that one. So we had discussions around that. But overall, with the exception of the EMS fund, all the other funds ended in a pretty good state of reserves at the end of the year. Any questions on that? Any other questions for me while I'm here? Super fun stuff, I know.
No, that's important.
It is important. So for those budgets to actuals, I have some time. I'll see if we can get a good report out of Tyler for those, so that you'll just get it faster if we can get it out of Tyler. That way we can get those to you on those funds so that you can kind of look down at the detail of those. And then other than that, yeah, if you guys want to get your questions together, you know, you send them to me directly. You can put them through the clerk's office and get them to me. We can do them, and then however, as commissioners, if you want me to come up, I'm more than happy to come up. We can go over those in detail. If you want a written, I can, you know, detail written. If you want me to zoom in, whatever you guys decide is going to be best for you.
I think we could do it by Zoom without having you come back up.
Okay,
And I think maybe one of the things I'd like to see that we do is, I know to during this kind of meeting also, to be able to have up on the screen what you're going through, because the community is watching. I mean, they look for like these kinds of meetings. That way they can see what pages you're talking about, because then we'll get the questions after, but then it wasn't on the screen for us to reference. This is, you did a very detailed one last year too, so thank you for that. I just know that when it comes to finances, that is of increased visibility in our community, and I think that means we can take this kind of meeting, and if you're agreeable to kind of do it, not just to the commissioners, but allowing the community to see what we're looking at, because it helps them to follow along, to show the success of the external audit, because they do ask us questions throughout the whole fiscal year about auditing and what's going
Yeah.
on, and it would help to get that familiarity with the document itself, because it does live online, so they can access it and see it, but to be able to be in this meeting and follow along, I think would be beneficial.
No, and so we'll definitely do that and make sure that the final PDF is provided to you guys a couple of weeks beforehand, so you have time to go through it, and then you'll have the PDF and you can share that as we go through the meeting.
Yeah.
Can you please remind me in what fiscal year did your firm start working on our audits?
The first year we did was fiscal '23.
Okay. Thank you.
Anything else?
Actually, really quick, Clerk Rosedale?
Yes.
Could you hold up your microphone? I'd like to see what color.
It's green.
Green?
Okay. I have community feedback that we're getting really poor sound quality from that mic, so just so we have awareness. Thank you.
Very good.
Not in our budget, sorry.
We have a graph for that.
All right. Do we want to tag that? Did they text you on?
They
put
texted
it
me
here,
during this
yeah?
meeting.
So how about we just tag that and hand it to facilities? We'll treat it like hospital and tag it out.
Because I got a similar text at a prior meeting, but by the time I saw it, it was too late and I couldn't tell which mic it was. But then I got the text again saying, hey, that particular mic is the one that's really poor sound quality.
Okay. All right, anything else? Commissioner Park?
Thank you.
Treasurer, any comments? She wants her cash balance to be correct, so we're doing good. All right. It is 11:52 and this meeting is adjourned.
Thank you. Nice to meet you.
Yes, you as well. Time to go over.
Yeah. Why do you not?
Okay.
Commissioner Korn? Before you leave the room, did you guys get